Hello to all traders and welcome back to another market review brought to you by Orbex. We're looking at dollar pairs today after the Fed last night in its FOMC minutes did give a slight hint that they will be pausing after their next rate hike when it does come about. So what does this mean for the US economy? Well, according to the banking crisis that happened a couple of months ago, it is still lingering around. So they don't want to propel rates too high because this could give another catastrophic effect in the market as well. But we've seen the euro dollar pair in particular drop over 300 pips in favor of the dollar in the last few trading sessions. So what does this mean for the eurozone as well? Well, we're looking likely that any further rate hikes from the European Central Bank could have more of a bad effect on the recovering economy, because there is still signs that it will fall into a recession in the near term as well. So as we head into the third quarter, okay, I've still got a little bit more time in the second quarter, but as we head into the third quarter, we are seeing signs that the Fed is starting to loosen its grip on its monetary policy, and also the European Central Bank will be looking very closely at their next move as well to see where the dollar pairs will be going and also the euro pairs will be going. But for now, let's just take a look on the euro dollar pair. I've got it on the the 1 day chart first of all, and as you can see here, from the height that we saw roughly at the beginning of this month, we saw this 300 pip move to the downside, now just teetering and just kind of testing the 107 level for the first time in a few sessions as well. So we've got this V-shaped decline to the downside happening at the moment. If this does continue, then naturally we'll just be looking at the break of 107 and then a move back down to 105. So another 200 pips is possibly likely in the next couple of weeks as well. So we'll just be seeing if this does engulf the sentiment that's going around, especially for the US dollar as well. Not too many divergences on the RSI. As you can see here, it is more of an uptrend than it is here. However, if we do dip lower, then we could have more of a slight dip and then a bounce, because this is obviously a bullish divergence that could be forming. But at the moment, it's not. So we're not really looking at that signal at the moment. If we look on the 4-hour chart, we're just seeing now signs that price action is just in favor of the dollar. But if we just see, with the assistance of the Ichimoku cloud, prices are trading very vastly under the clouds. This is giving the impetus that we are in a fully fledged bear market at the moment. Obviously, we've got the usual correction and downturn, correction, downturn. So we are looking for another slight correction because we have fallen below the previous low here. And then possibly another move to the downside. But 107 seems to be a lot of economists and traders' big psychological level before we start dipping lower into these new fresh lows that we've seen, haven't seen for a while, or at least about a month. So what I want to just have another look at as well is the dollar yen on the daily chart first of all, because we are just shying away from the 140 level. And again, if we just look at the last time that was kind of breached or touched, this was at the back end of November last year. So quite a multi-month high at the moment. As you can see here, we did have this large correction, but now this next wave of this majority move to the upside is really underway at the moment. So 140, we could face some big resistance though, because it is quite a big psychological level, a bit like 107 for the euro dollar. So just keep an eye on that, because it is something that we will be looking at in the near term as well. A little bit like the divergences on the euro dollar, as you can see here, it's very flat at the moment, pretty much on the same level as it was before, but obviously we're having a bit more of an uptick. So we're just going to wait and see if we do get a divergence there and which direction it will go as well. And on the 4-hour chart, just lastly, as I said, with the assistance of the Ichimoku cloud, I'll just remove these drawings so it's a bit easier to see. We are seeing the dollar yen fully fledged bull market at the moment. So we're just waiting. If this 140 handle is touched, then we will possibly see a slight resistance at that particular level, but then hopefully another move to the upside if you are buying this particular currency pair. But let me know what you think, what you're trading on, and where you see the Fed going in the next, not even the next rate hike, it possibly on and as it keeps going, because this banking crisis turmoil is still lingering in America, and obviously any more banking closures or banking bailouts will be very detrimental. Treasury Secretary Janet Yellen has already pointed that out, and obviously we'll see where the next move is for the Fed. So thank you very much for joining me. We'll see what goes on in today's news. We'll bring you all the latest on our Telegram and YouTube channel. So thanks for watching. Stay tuned, stay ahead with us, and have a great trading day ahead. Bye for now.